start. We are connecting to YouTube now. Just a few minutes. Thank you.
Yeah, just go and come back here. She's not able to do it on that. Just one second.
Miss Hanane, I just brought for you the virtual tea.
Oh, thank you. Wow. That's good. You kept your promise. I said there will be coffee. Great.
They're trying to organize everything necessary.
Perfect.
Lorenzo, shall we keep the camera on all the time, or we can rotate?
Yeah, it would be better if for you it's not a problem. I mean, or at least during your speech or answer to the question.
Okay.
Shall we start?
Yes, okay. We are technically ready and online. So, Mr. Sultan, you can start whenever you want.
Yep. I'd like to welcome everybody today on our webinar. This webinar will be focusing on startups. The topic will be on startups. Are they worth it? I'll start by introducing our panelists. We're having with us Mr. Ali Samir Uthman. He's a startup advisor at Microsoft for startups for the EMEA region, focusing growth strategy and technology and transformation. We have Ms. Hanane Benkhallouk. She's executive director of Sustainable Leadership Consultancy. She's focusing on human creativity and transformation innovation strategist. She's an advisor, author, global speaker in the United Arab Emirates. We have Mr. Marwan Swedi, visionary. He is specialized in finance and SME and enterprise development. He been in a lot of committees supporting SMEs and SME funds. We have Dr. Ruchi Dana. She's a board member of Dana Group. She's a Forbes Power Businesswoman for the year 2020, Forbes Next Generation winner of 2017, 2018, and 2019. Graduate of Stanford with an MBA and entrepreneurship speaker and a visionary woman. I'll start first of all by highlighting the first question to Mr. Ali. Mr. Ali, COVID-19 created a huge shift in the economy worldwide. Can you share your insights on how this shift affected the startup market? The space of you is yours, and please, you can give us your insights.
Thank you. So yes, COVID-19 has been a challenging time for not just startups, but every single business out there. And just like with any challenge that we see in any industry, there are always opportunities. So when you talk about startups, there's a number of factors that influence the success and growth of a startup, and they're interrelated to other industries. So what are those? In a broad sense, that is venture capital, which is the industry that helps fund growth for startups. Corporates, which are large enterprises or the corporate sector that works with startups, either in an investment capacity through corporate venture capital, or in terms of an innovation capacity where they're looking to work with startups and do POCs and proof of concepts to engage them into becoming either vendors or solutions that they onboard in their day-to-day. The ecosystem, which could be government-funded programs or incubators or accelerators that are for part of the private sector that encourage startup innovation and growth, and all of the above come together to shape policy. These are kind of some of the broad areas and kind of stakeholders in the ecosystem. Now, what have we seen as a shift in terms of COVID, right? We've seen a lot of things. We've seen fundraising, both as a venture capital that's looking to raise a new fund, as well as in startups that are looking to raise capital from VCs, slow down. Now, why is it slowed down? Because the pandemic brought with it other economic uncertainties, right? Where public markets have seen volatility, where the appetite for risk has reduced because of that uncertainty. And the venture capital ecosystem is known as the riskiest asset class, right? Outside of everything cryptocurrency. And when you're talking about the risky asset class, if the economy is volatile and the markets are volatile, then there's less money available to put in the riskiest asset class, right? It's just normal and natural that that's to happen. But that doesn't mean that money isn't available in VCs, right? Because there's a lot of funds that are already raised capital. The only difference is now they're not blindly investing into anything that they see that they think may be a good opportunity. When venture capital funds invest, they know that there's a high chance of failure, and they make the bet thinking that if a handful of these bets grow, they will exponentially grow to cover for the losses of the ones that didn't. And they have their own various theses and models and evaluation criteria to identify those opportunities. But within that identification, there's been a slowdown, which has impacted a lot of startups, because before the COVID-19 pandemic and before this kind of economic uncertainty and crash, you were seeing very inflated valuations, and you were seeing crazy deals happening. And you know, just in our region alone, you know, we've recently read about startups that raised tens of millions of dollars in 2019, only to shut down today because their business models didn't make sense. They were very high cash burn. There was no clear path to profitability. So VCs also are using this opportunity to smarten up and say, you know what, we're not just going to give money away because we have limited money available. It's not easy to raise funds in this environment. And therefore, we will, in a very calculated and careful manner, identify startups that we believe there is a clear path to profitability, there isn't wastage of funds. The founders are not just looking to keep raising capital, but actually build an efficient business, which is, in a way, going back to what the roots of entrepreneurship and business building are, right? To build a credible, sustainable business that can last over time and is just not constantly burning cash to look for funding. So I think that's brought around some sort of a overall correction in the way the markets were behaving with venture capital and startups in the last year and a half to 2 years. Simultaneously, you've seen corporates that have realized, and this is a positive for startups, that they need to innovate. And corporate innovation internally is not as easy as maybe engaging with the startup ecosystem. So you're seeing a lot of corporations wanting to engage with startups because they feel that they are disconnected with being digital, because COVID-19 has forced everybody to go digital. It's forced everybody to be connected. It's forced everybody to efficiently operate their systems with people working from home, with customers wanting everything from payments to fulfillment connected digitally, with less human interaction available. And the reality is most companies and large corporates and even SMEs weren't ready for that. So what COVID did was force that. And when you're forced into a corner, you're forced to work with those solutions that are available to you. And that's what's given startups a great opportunity. And then when it comes to startups themselves, what we've seen is a shift. So a lot of startups are now gravitating towards healthcare, data, AI, tracking, metrics and solutions that would be used within this pandemic to help there's this word that's been thrown around called the new normal. I mean, I wouldn't call it the new normal. Really, it's just accelerated digitization, right? And you're seeing startups that are kind of realizing that there's an opportunity now for governments and healthcare providers and hospitals and banks and companies at large that need solutions digitized better. And it's allowed them to pivot towards going slightly away from the more cash burn consumer marketplace type businesses and more towards fulfilling a need, bridging the gap. And that's allowed a lot of new types of startups coming through. A lot of them using blockchain for data and security and preventing of fraud, because really the pandemic has brought around new cases, right? There's been a lot of fraudulent transactions. There've been a lot of fraudulent deals with respect to PPEs and goods coming from countries and shipping to other countries. And a lot of startups are taking this as an opportunity to fill that gap. So in a sense, my main message would be, what we do know is change is constant. There's always change. The rate of change is different every time. Sometimes that change is very large. Sometimes that change is smaller over a certain period of time. So change is constant. What the pandemic has done is just accelerated change for a lot of different ways of how the business world is working, which has both created in some ways difficulty in capital raising for startups, but also in other ways, opportunities to fill new gaps that have been created. So that's kind of how I'd like to summarize that.
Thank you, Ali. I'll move now the question to Ms. Hanane. Ms. Hanane, my question is, why do you think investors are reluctant when it comes to investing into startups?
Okay, yeah, thank you, Sultan. Thank you for having me. It's a great topic, and I think we've gone a long way from the times that we were working on the entrepreneurship and innovation infrastructure at Mohammed bin Rashid Al Maktoum Foundation, if you remember. And so I believe that we've gone a long way from 10 years. So today there is more appetite from investors. There are more VCs, there are more angel investors. I wouldn't say that they're reluctant to invest in startups, but we still have a challenge in seed and pre-seed because investors want, I think the culture, especially in the region, that at the end of the day, whoever wants to invest in anything, the main reason or the main objective is to make that money work for them, to increase their return on investment. So obviously, they will be hesitant to invest in a concept that hasn't been proven. So from what I see, working with entrepreneurs and helping them pitch to investors, there's still that difficulty in convincing investors to take a chance. Everybody wants traction. So this is the word that we always hear, that we need traction. We need to see that concept, and not just the proof of concept, but really that it's working, that it's gaining traction, especially that most of the investors get into it with the objective of exiting. And I think 2019 has really proven there was a record in terms of investment in startups, in terms of investments from outside of the GCC, from international companies. We've seen unicorns like Kareem, we've seen the Souk deal, and all of that. So that idea of we invest so that we can exit quickly definitely does not create an appetite from investors to invest in newly launched concepts, and that remains still really a big challenge that we need to all work on. Of course, there's another Another reason to that, or another cause to that, is that most of the founders here don't lack the experience. Most of them come without a full team. So you have a founder that's still working with freelancers. So all of that does not give confidence to the investors that this concept might make it. So there's a lot of education that needs to happen. There's a lot that needs to work on in the ecosystem to really help these founders understand that it's about building a sound business model, a sustainable, scalable business model, not just an exciting idea that goes with the trend, like what we are seeing happening now. All the tech solutions, there are new needs. The pandemic has created opportunities, has shown us the development or the change in behaviors and consumers that are creating new needs, and everybody gets excited and start launching technology platforms or technology solution, which is great, but it takes more than just having an idea or a proven value proposition to build an attractive business model and an attractive a startup that will attract more investors. So I think it's the responsibility that comes to both the investors that are still not really confident to invest in seed and pre-seed, and also to the startups to really work on their ideas to make them more attractive. That's what I get from being active and engaged with startups, and this is what I see happening on the field. I think you're muted. I can't hear you. At least I can't hear you.
صوت سلطان أتوقع.
I'll move to Marwan. Thank you, Hanan. Marwan, startup needs support from the whole ecosystem, consumers, regulators, and investors. What measures and initiatives should be taken by these main stakeholders? Please, you can take the table and answer the question. Marwan, I think you're on mute.
I'm on mute. I'm sorry. Sultan, well, as you said, like SME startups, they cannot succeed by themselves without having a holistic approach from the entire ecosystem. When we talk about the entire ecosystem, we talk about it starts with the leadership. So let us take UAE as example. We see that the leadership is taking care of the entire system. When we see like Mohammed bin Rashid establishment for SME, this is an indication of the top leadership are supporting the SME system. We have Khalifa Fund, which is again from the top leaderships. We do report that into the executive council. We have Saud Sagar and Ras Al Khaimah, and all other funding and supporting SMEs entities. So the government is like the first one. The second pillar is the regulatory framework. When we talk about the regulatory framework, we take at least example, which is the procurement government. Government procurements give, I think the law got approved last year to get at least 15% of the government purchases from SMEs. That will by itself is going to enhance the cash flow cycle in the SMEs. This is the second pillar. The third pillar, the ecosystem, which is the government, the local government entities or the federal government entities, in terms of facilitating and incubating some of these startups. We talk about big companies and or large entities within UAE, like Emirates Airline, like Mubadala, like Etihad Airlines, how they are going to activate their role within the SME ecosystem. We can take example like taking all the catering services from one of the supported SMEs in UAE, enhancing the booking and ticketing system for Etihad Airline through a local SME, instead of they are going to enter the market as a large entities. These are examples of how can the ecosystem support SMEs.
Thank you, Marwan.
Welcome.
Actually, you're right. The whole ecosystem should be combined collectively to support the entrepreneurs and create a proper ecosystem that will enhance and enrich the whole environment. I'll move now to Dr. Ruchi. Dr. Ruchi, as a successful businesswoman recognized and awarded by international organization, can you elaborate more on what are the risks startups face and who they should work with to move these issues to opportunities?
Sure. Thank you so much, Sultan. It's a pleasure to be here. I'll just give a brief background about myself, and during the background itself, I'll talk about all the challenges that I've faced as a startup and as a businesswoman. So I was born and raised in the Middle East. I was born in Libya, that's in North Africa. And then when the Libyan sanctions happened, my family moved to Dubai. So I did part of my schooling from Libya, part of it from Dubai. And even as a child, I was very curious about like breaking up toys, making new inventions out of those toys and doing something like that. So I went to India for my medical college. And even during my medical college days, I was working a lot on low cost medical devices. I was really passionate about building things with my own hands. I was the first student of my university to get travel grants to go abroad and present papers and publish papers. So I really wanted to commercialize these devices. That was my dream. So when I went back to India and I wanted to commercialize these, I spoke to my professors and like the best of professors in my medical college. But like nobody really understood the language of business, because like in medical colleges, you rarely see startups or new kind of innovations. Like even the best of professors, they would be happy to publish like one more paper in a peer reviewed journal. But like about starting a company, that's something that's very difficult, and everybody's sort of scared because they don't really understand the language of business. So that's the reason I thought I should go for an MBA. I applied to various business schools. I got through into almost all of them. I got a full scholarship from MIT Sloan, but when the Stanford results came, and I really got excited and I chose Stanford. And one of the reasons for choosing Stanford was that Stanford had the Stanford Biodesign program. So what happens there is that it's at the intersection of various disciplines. So there are doctors, engineers, lawyers, PhD students, MBA students, everybody comes together to solve for unmet clinical needs. So that was a time that I was really excited, and our team actually won the NIH grant from the US government to actually find needs, and I led a trip to China, and it was really exciting. So that's when I understood that it's really important to be in and be surrounded in the right ecosystem, because like you can have dreams, you can have ideas, but ideas, unless executed, they're worth nothing, right? So that's why, like, and to do that execution, you need to find the best of co-founders. So currently I'm working on a low-cost robotic surgery startup in which like my co-founder Fred has already sold 4 medtech companies in the past. He was a guest professor at Stanford. So like you learn a lot from that ecosystem. So that's one of the things I would suggest, that it's really important to choose your co-founders carefully. And the second important thing is that you should be really passionate about what you're doing, because like there are times in startup's journey when like there's a sudden peak of excitement and then there's a trough of sorrow, because like suddenly you realize that your product doesn't fit the market. There's no product market fit. So that happened in our case as well. So when we were dreaming about this robotic surgery startup, we were thinking that we would get AR and VR and all of that into the device. But when we went out and spoke to the customers, that's the doctors, we realized that the doctors are not ready to wear the headsets right now to do surgery. So we just realized that this is something that maybe it's something futuristic. Maybe the medical college students might be happy with it, but the experienced doctors, they're not ready to change their entire system of working with like the heavy headsets. So we pivoted our product many times. So that's again a very important part, that it's important to get out of the building and speak to the customers. I took Steve Blank's Lean Launchpad class at Stanford, and he used to like scream at all of us that get out of the building. You don't need to sit in the lecture theater and learn anymore. You just have to go out and speak to the customers. So that's when we all realize that it's the customer is really important for a startup, and you have to make sure that you're complying to his needs and you're modifying your product to his needs, because ultimately he's the one who would be buying for your products. And the best like example of a product market fit is that if you are able to sell to your customers without paying for any online advertisements or anything, that's the best example of product market fit. So I think that's really important. Apart from that, the other main struggle that startups face is that you should never run out of funding, because that's a deep dangerous situation to be in. So I would suggest, like especially for all the women entrepreneurs out there, to try out various non-dilutive sources of funding. There are a number of like startup competition, pitch competitions in which you can win prizes in cash or in kind. Like they give you like some Google ad credit and all those things, and that's a huge saving on your entire budget. So those are the non-dilutive sources, and there are also grants that are available, especially in medtech. So we actually applied for the NIH grant again. So these are things that you can continuously look for, and the best way to go about those is that you just like take a weekend ahead and then like work out all the deadlines for various applications that you have to submit, and sit down in one weekend and submit all the applications in one go, because that's like a productivity hack. You can actually apply to multiple places in a one go, because otherwise, like if you sit for each and every application again and again, that takes up a lot of your time, and you take a lot of time to focus, sit down and then work through it. But like almost all the applications require the same answers. You just have to tailor them according to the application. So that's one thing that's really, really important, that never run out of funding. So you can explore non-dilutive sources of funding, you can explore crowdfunding. So these are things that you can continuously explore. And then definitely, like if you are lucky and you're able to raise funds through angels and VCs, that's definitely the next step. But like initially, it's really good to actually focus on the non-dilutive sources of funding as well. Thank you.
Thanks a lot, Dr. Ruchi. I'll move back to Ali. Ali, my second question is, startups are facing a lot of problems now with the pandemic. How do you think startups can utilize the current situation, and how can they succeed in overcoming the pandemic?
So, at least from my perspective, there's so a lot of what the other speakers said is a great opportunity, right? If you're a startup that's having difficulty with fundraising, look at non-dilutive sources of funding. I think Ruchi is absolutely right. But I would just say, maybe with a grain of salt, that sometimes non-dilutive fundings, particularly grants, they may open you up to funding, but they may restrict you in another way, which may be opposite of where you expect your business to go or your mandate is. And so maybe be a little careful in selecting your non-dilutive funding, but that's a great opportunity to take advantage of, especially if you're cash strapped and you need it to ride out the pandemic and it's tougher for you to raise capital. That could be because of your business model, industry, stage, whatever. Similarly, what Hanane said, absolutely agree with that as well, right? To buckle down and focus on your business sustainability, to focus on your model, to understand that to build a business is more than just to raise capital. It's to understand your systems, your operations, your flow, to know your customer. And it's focusing on these critical pieces of the business that will help you make it to the other side. Beyond all of that, there's lots of tools, right? So the first thing I would say is relation to what everyone else has said. The pandemic is a great time to assess whether what you're doing is the right thing to be doing, right? If there's no post-pandemic future, if there is, and it doesn't necessarily need to be linked to the pandemic, right? It can be a year from now. If a year from now the model doesn't make sense to an investor, it's probably because the model doesn't make sense, right? And it's a great time to take these challenges and learnings, and when you focus on your business in itself, and you focus on your customer, and you focus on your unit economics, and if you focus on a lot of these areas that will help you identify whether this is the space to be in, it's a good time to reevaluate whether you should even be in this space. So rather than saying, what can the startups do to make it through the pandemic, I would flip it to say, what can founders do, right? Because a startup at the early stage is all about the founder. And it's about what the founder can do to really identify that if they're an entrepreneur, then part of entrepreneurship is realizing that what you're trying to build out may or may not work. And the pandemic is a great kind of equalizer, in the sense that even when I've spoken to a lot of young founders that are graduating from college, and they're saying, we want to do a startup and we don't want to go for a job, or we don't want to show a gap in our CV. Really, a pandemic's a once in 100-year event. It's the only time a gap in your CV will give you an opportunity to do other things, right? And to really test and stress test a lot of your ideals and your visions and what you're building out. So I would say, what can founders do? And founders can do a lot. They can stress test their business and look at the next stage. Directly associated to the program we do at Microsoft, if you're a B2B startup that is SaaS, PaaS, DaaS or similar business models, if you've raised a little bit of funding from an institution previously and you have a cloud consumption mandate, apply to our Microsoft for Startups program, because the way the program is geared, it's built to help you scale. So if you're based in the UAE, or if you're based in Saudi, or if you're based in any other regional market, and you apply to the program and you qualify against the criteria, the program is geared to help you co-sell your solution across the Microsoft global ecosystem. And this can sell your solution in Europe and the US and Southeast Asia without you having an office there, which will help you ride that pandemic, right? If that's how you want to look at it. It'll help you scale your sales. It'll help you accelerate your growth. And it's accelerating your growth that will make you attractive for VCs to help you raise capital, right? So directly associated to what I do is the Microsoft for Startups program, where we try and help startups grow. And that can be both during a pandemic, where it can be very useful, or after the fact.
Thank you, Ali. Your insights are valuable and really added a lot of value to the session. I'd like to move now to Ms. Hanane.
Sure.
Ms. Hanane, my second question will be on where do you think the pandemic will lead the startups?
Okay, the pandemic, just like any crisis that creates uncertainty, also creates opportunities. I think if we just look back, since the start of the 20th century, a lot of companies like Microsoft and the GEs of the world, and more recently Facebook, Uber, and Airbnb, they were all born out of a crisis. So again, we'll see the same pattern happening, because every time there's a crisis, there are new needs that are born. So I would see that I would want to start with the positive outcome, because I do believe that every crisis brings new opportunities and brings innovation and disruption, because the consumer behaviors are evolving and new needs are rising. Okay, we are losing a lot of services. A lot of industries are becoming obsolete, but at the same time, many new ones are emerging, are being born. And it's up to the founders who really can identify those new opportunities that could come up with the next unicorn. Now, another thing to summarize it, actually, it's interesting you asked me this question, because during the lockdown, I was reflecting myself like an entrepreneur myself, running my own startup, and thinking, okay, what do we do with this lockdown? We are in panic mode. The unimaginable happened, and suddenly everything is disrupted around us. And that reflection led me to write a piece that was published on Forbes Middle East in April. And I came up with those 4 R's that we as startups, it came from personal experience, that I thought it's worth sharing, because I felt that we went from business as usual, all of us, to almost like an R&R, which is referred to as rest and recuperation. So we took that time, it was imposed on us to just stay home, and all our activities were disrupted. But how could we, or how at least I felt that I used that time of rest and recuperation, and advise everyone to that piece that was published, is really focusing on the 4 R's, which is reflect. This is the time to really sit back and reflect, because sometimes we are head down in operations mode and we just keep going on the day to day. We don't take that pause of thinking, what am I going with my business? What is it that I need to do? What is the purpose of my business? Is it still remaining, as answering and responding to the needs of the people that I'm serving? So reflecting, take the time to reflect, and then reconnect with your purpose, with the very reason that pushed you to start that business, because everything around us can change. The needs could change, the wants of the audience we're serving can change, but the why or the how we are presenting our services could change. But the who, focusing on who we are serving, and answering these questions and reconnecting with that, reconnecting with your purpose, reconnecting with the people. And I've seen a lot of brands, and I would like to acknowledge, for example, Emirates. There were no travel, but they were communicating nonstop when engaging and reconnecting with their customers. They didn't just shut down and said, okay, there's no flights now, what do we have to communicate? They were communicating with fun things, showing their employees at home, just promising people about how the trips will be, showing how they are becoming more relevant, how they are sanitizing, how they are planning to really match the new norm after we go back to normal. So reconnect, stay reconnected to the people, and do that whenever there is a pause like that. And then the third R is resilience, building resilience. I think if there is one lesson that we learned from this COVID-19 pandemic, and I agree with Mr. Samir when he said that, I always say that this digitalization and all this digital transformation was not created by COVID-19. It was just accelerated. It was coming anyway. So resilience, because we can no longer talk about managing change. We live in an era where change will be happening constantly, and uncertainty has become a fact of life. So we cannot sit down and make plans and budget and forecast and anticipate those changes. They will just hit. And I think it's going to continue like that. So it's about building that culture of resilience within your corporation, whether small or big. And simply that means the ability to bounce back, the ability to be flexible enough so that the decision-making does not take longer. The ability to absorb that shock and change whatever needs to change so that you can continue on surviving and thriving. And the fourth R that I spoke about was remaining relevant. So no matter who you are, and we can just look back at all the giants that crumbled. If you've seen the list that was circulating of the companies that went bankrupt and more to come, they were leaders in their industry, but they couldn't sustain it. So it's no longer about being the expert or the pioneer or the leader in your industry, but it's always about asking the question, am I relevant to today's need? So everyone has to continuously assess their company, their business model, the skills of their people, their skills themselves as CEOs. Am I relevant to today's? This is going to happen even in the workforce. And that we're no longer talking about somebody with I don't know how many PhDs and 30 years of experience, and that's it. And then he or she feel they are the sovereign of what they do. It's a 15-year-old kid could come and disrupt the position or the job that or the role that you are handling. So it's crucial, and this is an advice that I give everyone, to ask the question and assess and reassess very frequently, am I relevant to the changing needs of my customers, my stakeholders, my market, and the dynamics around me? So I guess these are, if we really look at those 4 R's, each of us as a startup or founder or as a CEO or as a business leader, it will give us a lot of insights on how we can survive and keep thriving regardless of another crisis. Because to me, it's just another crisis, and there've been so many, and there'll be more. Thank you.
Thank you, Hanane. Thank you. Yes, indeed, there'll be more. It's a cycle. It's a cycle that returns every once in a while. As Mr. Ali said, let's ask the founders what they should take, what they should do. Hanane, you mentioned the ways how to deal with the situation, how to face this pandemic. I'd like to ask Marwan, what do you think? What's your insights when you look at entrepreneurs? How can they enhance their opportunities after you listen to Mr. Ali notes and Ms. Hanane comments? How do you think they can enhance their opportunities? How can they shift their organization from a startup to become a bigger corporation, to become a unicorn? All the pandemics or all the crises created unicorns. So what do you think should be done to take the chance and change your organization to become a unicorn?
First of all, Sultan, I think this is a great insight from Ali and Hanane. Hanane, I wish I wish I can read this article if you can send us the 4 R's.
Absolutely. Well, I'll share it with you, definitely. I will share it
Inshallah.
with you. Thanks.
Yeah. See, the main thing that each entrepreneur, they need to understand that not all the entrepreneurs will become like Steve Jobs, or will become like all of the entities, SMEs will become a unicorn. But at least what we encourage them to be sustainable, to think about a product that appeal to the consumer demands and can be enhanced on a regular basis. During pandemic, Sultan, what we encouraged, what we saw actually, the entrepreneurs are stagnant. Most of them, they wanted to sell what they used to sell before the pandemic. For example, if we talk about like food and beverage entities, restaurants, they wanted, they just stopped doing businesses because of the pandemic, while other entrepreneurs thought about differentiating or a different business model of catering the food and beverage. Some of them, they have contacted agencies, which is the agencies after the sick people. So they contacted them, they created a contract of delivering the foods to the patients. They found ways. We encourage entrepreneurs to be agile. Think about agility, like Ali said. The founder needs to understand that the business is not about one product and he has to stay with that product forever. He needs to change the product, customize it based on the consumers in different countries, in each economic cycle. For example, if we talk about the glass manufacturing, some of the businesses has shifted from glass manufacturing because the demand has slowed to produce the glass shields for the doctors and the medical equipments. So they found ways how to change the business model, even if it is for temporary reasons. So this is something that we encourage the entrepreneurs and the startups to think about: being agile, think about the consumer demands, understand it better. This is the main things.
Thank you, Marwan. I'll move now to Dr. Ruchi. Dr. Ruchi, my question is regarding investment in technology. With the pandemic, with COVID, most of the investment houses is moving towards technology. Companies' valuation increased in huge percentages that we cannot even predict or even imagine. Do you think it's a right move, or do you think it's a bubble that will explode one day?
Sure. Thank you, Sultan, for that very relevant question. Just to give you some context, I think Hanane said the right thing, that crisis brings opportunity. So there are definitely a number of opportunities in the market right now. What happened in 2008 and 9, like most of UAE and even our own family business, we invested a lot into distressed assets that were like factories, sick units, that we turned them over and all. But this time around, we are actually looking out for opportunities in startups. And the reason for that is that there's so much good exits that have happened from this region, and it brings a lot of excitement. And the other thing is that traditional businesses have to change with the coming times. With so much innovation happening in various industries, as a family business, we feel like our business is almost like a Titanic moving in one direction, but we don't know from where the next innovation would happen. So it's really important to be in touch with the startups and the ecosystem and understand what are the new innovations happening, maybe in your own field of business or in other businesses. And the best part is that, for example, recently I came across a job posting from a very big corporate company, and it was the HR person who had posted this job posting that they require a social media manager with 15 years of experience in social media. So we don't want to end up like that, because like 15 years of social media experience is something that's not possible. Like, would you be like the founder of Facebook or Orkut to be hired at these companies? So we don't want to end up in those blunders. So that's the reason that all the corporate companies, family businesses and all, they should be in touch with the new innovations that are happening, the startup world that's happening. And the best part about the current situation is that there are a lot of bridge rounds and down rounds that are happening. So the valuations were crazy. It was almost like a bubble, but now there's a lot of correction happening in the market, except for maybe 2 or 3 sectors like edutech and health tech. These are sectors in which like there's a big balloon right now. There's a big bubble because like these are sectors that everybody is looking at suddenly, and like that's the reason the valuation is still rising. But if you look at other sectors, like there are so many other sectors to look at, like electric vehicles and all, in which those sectors might be even relevant to your own industry, because that's how you're able to do the due diligence in these startups. Because if you understand like the product market fit of these startups, that's when it will be much better for you to invest into these startups. And the startups would also get a lot of feedback from strategic investors like you. So I think like the best part is that the valuations are going down for most of the startups, except for a couple of key areas in which like the valuations are going up. So it's a good opportunity to invest. And even if like you feel like startups would be a risky game right now, there are opportunities to invest in VC funds. So that's what we did as well, because we are not experts into fintech or in, like the new innovations that are happening in outside of medical or life science space. So that's the reason we tried to look at VC funds, which, and it's a good time to enter these funds, because like in terms of the vintage year, it would be like the returns would be good, because the valuations are at a rock bottom right now for other industries. But like for health tech and edutech, I think the valuations are really high right now. It's better to actually wait and watch and then make a decision after that. The best part about VC funds is that you'll actually get to see like the returns that the fund managers are be able to give you, because there's a good saying that says that a smooth sea never makes a skilled sailor. So like it's only when the sea is rough and all that's when you see like how the sailor actually performs. So it'll be a good opportunity to see how these funds perform in the near future as well.
Thanks a lot. Now we move to Q&A. I'd like to introduce Mr. Lorenzo, the CEO of the consultancy company, Vault Management Consultants. He'll be taking care of the questions from the audience, and he will be directing them to the panelists. So Lorenzo, please, you can start.
Yes, thank you very much, Sultan. Thank you to all of you. Let me just introduce the fact that we receive a lot of questions, and let's say, I think as a good point of view, we didn't receive a lot of questions strictly related with the pandemic. So I think this is a very comfortable point, that investor and startup owners are really focused on their project and the opportunities, and not just thinking about the cage that this pandemic maybe is creating around them. So this, I think, is a very good point of view. I'll start with Mr. Ali. I'll try to avoid, of course, all the connection with your personal and private business, but just to get your point of view on the current situation and on the market. We have a request of advice, mainly an advice from you, thanks to your expertise. And is what are exactly the sectors that you see more interesting, more profitable now and in the future for new startups? Thank you.
Hi, can you hear me? Yes. So, to be honest, it's a very broad answer. There's different types of companies and different types of founders, right? So there are those companies that are always looking for an exit because they feel like they can create a certain valuation from their business and someone is going to come and buy them because they have a large customer base. Personally, for me, that kind of model I don't agree with it. Personally, I'm not a fan of it. but that model suffices for any industry, right? Because really you could be in any industry and inflate a valuation and try and sell it. And guess what? If you get lucky and someone wants to buy you, or your customer base is worth a certain amount to somebody, you've done well, right? You've exited. But for me personally, I'm more a fan of founders and businesses that are looking to build sustainable businesses, that are looking to focus on their unit economics, their value, their market, their demand, their customer need, the opportunity, right? And they're looking to solve a problem. I think for me, those are the types of businesses that really will go large and will last long and leave an impact. So when we talk about those types of businesses, because I personally try to look at those, I think where success lies is a natural evolution, right? If you follow tech startups or the tech ecosystem from where it started, Silicon Valley being a primary hub, to where it very quickly shifted as another hub, which is China, right? Where they're doing amazing things when it comes to technology. In both, you will see that there's a certain theme, right? Typically, it's around access to financial services. If there's no access to financial services, transacting on a technology platform isn't easy. The masses can't transact because they don't have access to digital financial services, right? Similarly, you see typically any country that's evolved with startups or technology or digital evolution, it started with marketplaces, e-commerce companies, e-commerce marketplaces. That has over time then expanded into fintechs and more complicated B2B SaaS companies and so on and so forth. So really, I would say when someone is asking, what do you think the future is? It's very different to answer that question, right? Is it, what do I think the future is in the UAE? What do I think the future is in Middle East? What do I think the future is globally, right? And so it really needs to be a little bit more specific. If you ask me holistically, I look at the region as an opportunity. And why? If you take the region from Egypt to Pakistan and everything in between, you have some markets that are like the UAE, Saudi Arabia, Oman, that are rich economies with a government that is very active in creating an ecosystem for startups. They're providing infrastructure and support and services, and they're bringing the best-in-class organizations to the country to help grow, right? But what they don't have is a very large market. The market is small. So when it comes to valuation and multiplier effect of businesses, that market will not give you that multiplier. So you have to look at other countries in the region that are much larger to capture that market share. Similarly, you have other countries in the region like the UAE, Pakistan, Turkey, that have a huge population in comparison, but they don't have the money to support the tech ecosystem and the startups, and they don't have access to infrastructure like the government in the UAE is supporting their companies with, right? And that's where you have to look at the opportunity regionally, because the market in itself is too small to get that exponential growth and scale and therefore impact the valuation. So where do I think opportunities lie? I think opportunities lie everywhere, right? It's where you can identify a problem and solve for it. Globally, where do I think opportunities lie? I think if you're doing a tech business today, and if you're not embedding artificial intelligence and machine learning into whatever solution it is, whether it's tech enabled or pure tech, it's a mistake. Because that technology is capturing so fast that there will always be opportunity in the artificial intelligence space, as long as you're looking to use digital to automate processes, right? Where do I see the future? Any business that will replace a human being has potential. That can be in health tech, fintech, ad tech, ed tech, anything. Any tech solution that can replace a human interaction or human service will be the future, right? Now that has a positive and a negative. It has a positive because it creates a lot of value, it creates efficiency, it creates valuation for the startup and the solution. At the same time, it makes people redundant who aren't geared for the digital economy, who will lose their jobs as a result of that digitization. So there's a pro and a con when it comes to those opportunities. So for me personally, I think opportunities are everywhere. It's how you identify that problem, how you solve for it, and the country or regional context that you're in will define where you should create those businesses. That's the best way I can answer that question.
Thank you very much for the answer. Thank you. We have one question for Ms. Hanane. More than one, actually. I tried to summarize some of that. And so you, during the answer of the previous two questions, you clarified very well, of course, the details about the 4 R's. You spoke about the sustainability and the fact that the business model has to be scalable. And you spoke also about the needs that can change.
Right.
So a suggestion that one of our attendees is asking you is, what are exactly the key points for a successful business model? So let me clarify a little better the question. We saw also a question about the evaluation game. So when you want to create really your startup, you need to be more focused on the financial part, like, payback period, ROI, or skip that point and go focus on the core technology, core solution of your project. What are your suggestions about this?
Yeah, my suggestion is that we, the right business model happens with the intersection of 3 elements, which we use with the design thinking approach. Is there's something that is desirable by the people, which means it solves a real problem. And I think I aligned so much with Samir when you were speaking. I was just nodding because this is exactly what I stand. And that's why I always position myself as an advocate of human centricity, because building human-centric business models mean building business models that solve real problems of humans. Even if you are bringing the most disruptive technology, it has to solve an existing problem for it to be human-centric. So it's the intersection. If we draw 3 circles, the right business model and the right innovation happens when you start from what the people want and need and what is solving a complex and valid problem, not something that you just imagined and thought it was exciting. And the context, again, I'm almost repeating what Samir said, the context of the market and the audience that you're serving is crucial here. And then we think about technology. Technology is just a resource. It's just a tool that helps us bring that service to the audience that we are serving. So it's about, and then it's about the commercial viability. So we need to create a business model that comes in between. It starts from who we are serving, what is the problem we are solving? Is it a problem that is valid, which means there will be a need, people will be willing to pay money for that because it's a valid problem or a valid need. And then is it feasible as far as technology? So here the technology comes and then we talk. So it's a chain actually. And then is it viable commercially? So it's a whole process that we need to focus on if we want to build the right sustainable, scalable model that not only focuses on creating traction, exit, bringing, that's going to continue that. That's why I was answering the question about evaluation game. Yes, it is there, but all I'm saying, with all the flops that we've seen happen, especially last year, I think they will be, and from my interaction with some VCs and investors, at least I'm talking about the context of the market that I'm active and engaged in, we will see a lot of corrections and we'll see more focus on due diligence. And of course, some VCs are in it, as I said, are in it to exit it. They just see the potential, they invest and then they exit themselves. But I would suggest, and I believe, and I anticipate that the future business model has to be the one that is human-centric, scalable, and viable financially on the long run. I hope I answered the question somehow.
Absolutely, absolutely. Thank you very much for your answer. I have now a question for Mr. Marwan. I actually tried to merge 3 questions on the same topic. So basically, for new startup and new investor, would governments be a good point where to start with their project, for example, to increase the revenues of the government itself on a specific sector? So that could be a goal where to start.
Well, Lorenzo, I don't know whether I'm going to answer. I didn't understand the question right, but is the government, you mean as a buyer or?
Any government, any government, when you create a new startup, you can look at the public sector or specific need of the government or private sector needs of the people, of the social life. So these are the question where it goes, where we have as a startup developer, where we need to be more focused, in your opinion, more on the government side, more on the private sector?
Yeah, see, SME, I think they are well sensitive to the cash flow. So when we speak about the government, we are talking about big budgets. We're talking about government spending, which is higher than the private sector spending, at least I think within this region. So of course, startups, they see the government as a good supplier, as a good buyer for their products. They will try first to approach the government. However, what we see that's going through the future, we think the private sector spending will be at least matching to the public sector spending. So we encourage startups, encourage SMEs to move and approach large entities. As I said at the beginning, that like Emirates Airline, this is a private entity corporation. We have Etihad Airlines, we have Etisalat, we have Do. These are, we have ADNOC also in Abu Dhabi. I think they are spending a lot in the private sector, and we have a lot of SMEs are benefiting from their spendings. We have seen cases that provide catering for Emirates Airline, provide ticketing services to Etihad Airline. So we have seen a lot of projects in ADNOC's offshore projects. So these are SMEs that are benefiting from the private sectors. That going forward, I think we encourage SMEs to look into the private sector more than the government sector.
Thank you very much. Thank you very much. So we have now a question for Dana Rucci. A lot of people liked a lot and were really interested on the answer of your first question. So you mentioned about the importance of the ecosystem. They followed the trip that you did during your life. You spoke about the passion, but also you put a very important point to never run out of funding, which is of course a must for any kind of startup. So the question is exactly here. When you have a startup and you have the passion for your project, your idea, the risk to be run out of funding is always there. So what do you suggest to an entrepreneur who is going right out of the finance? He wants to keep the control of his dream, his project, but he has to choose, keep pushing with all his effort on his project to keep in control, but just getting loan or partners or buyers, or leave a part of the equity, give the control to a third party to at least see his dream coming true. I hope I explained well the result of this question.
Yeah, thanks, Lorenzo. I think that's a very difficult question to answer. So there's always this question about losing control or the economics. So like whenever you even sign a term sheet, it's all about economics or control. And there are some good venture debt funds that are coming out even in this region, which actually provide non-dilutive funding. So, but like if in those cases, like you have to be like a company which has certain amount of revenue, or maybe a hardware startup in which like there are some assets that can serve as a collateral for those venture debt firms. But like I think equity funding is something that's much more common these days. People are much more comfortable with this. But the best part about it is that it's really important to find the right investor, not just dumb money, but people who can actually back you and help you in the long run, like strategic investors, because that's really, really important for the success of your own startup as well. Because if you just get capital, then there might be like you might be able to reach to a certain place, but if you get the right investors in your startup, like the right VCs or the right angel investors who have the right kind of network or portfolio companies who can support you along the long run, then that actually leads you to be really successful. And oftentimes the VCs also help you in raising the next round of capital. So that's one thing to be really to really keep in mind. But the other question about is like to get non-dilutive funding or venture debt. I think that's something that's opening up in this region. There are a lot of new companies that are doing venture debt, and that's a really flexible way of approaching funding at the moment. But in still in those cases, it's really a risk, because like debt is definitely cheaper than equity in this case. But like what you have to do is you have to make sure that like you don't sign any papers in which there are personal liabilities and all that come across when the company is liquidated. Because as a startup, it's really, really risky. You never know when things might go wrong. Even big companies fail at times, and leverage is really risky at times. So it's much better to find a partner who can actually help you in the long run, in terms of like opening up their own network, like VCs or strategic investors who can help you in terms of even corporate collaborations, and helping you in proof of concept or pilot studies in various corporates. I think that's how you should think about it. Like there's always like the pros and cons of both sides, but it's at the end of it, it should be a very informed decision, and it's better to actually think about it with a cool head, and talk to your co-founders and your mentors or advisors about it before making a decision in a hurry.
Thank you. Thank you very much for the very clear answer. Thank you very much to all the panelists, and I will move the speech to Mr. Sultan. Thank you.
Thanks everybody for today's session. Before I end the session, I have one question for all the panelists. The same question. Once everything is cleared and COVID becomes a past, where do you think people will start investing in? I'll start with Marwan.
Well, Sultan, I think Ali gave us great insights about the behavior of the founder. So, and also Hanane provided us with also great insight about sustainable business modeling. So I think pandemic is an let's talk economically. It's an economic crisis. Beside this is a health issue. So crisis never ends. It's cyclical. Economic investors will be looking at tech at the moment, at least for the next 2 to 3 years. Startup founders will be looking more into like tech startups, fintech, and more into like AI, machine learning. This is something that shaped by the consumer behavior. Again, this is very cyclical economic. So if COVID ended, another issue will come to make the economic cycle to go down, and another challenge will be there. From that challenge, new opportunities will arise, and only the agile, both investors and agile founders will take opportunity out of that.
Thank you, Marwan. I'll move to Mr. Ali.
I'm just echoing what Marwan said and what I said earlier. I think investment will always go where there's opportunity, right? I think it's as simple as that. And that again is a market-to-market factor. If I were to just take the UAE as an example, I think 10 years ago, the opportunity was in the burgeoning tourism sector. There was investments in the F&B sector everywhere, right? From restaurants to clubs to bars to hotels to private members clubs. And that was the opportunity at the time, because you saw this blow up of Dubai as a regional hub and the UAE as a tourism sector, and the weather being favorable for all the people from cold cities. And that was the opportunity. That's where the money was going. Today, you see tech as the next frontier. You see the UAE actively wanting to go beyond infrastructure to go towards the future of technology and access and support. And what you're starting to see is, you're starting to see regulators that are very forward thinking. You know, you have ADGM, you have TIFC, you have all of these you have all the, you have MBRIF, you have all these programs that are trying to help SMEs digitize, come up with the times, create new avenues for solutions, using sandbox environments and helping create new regulations where regulation didn't exist, right? And you're seeing this. An example is a year and a half ago, you saw the scooter business as a startup pick up over here, right? And then all of a sudden they were gone and the RTA didn't allow it. But that was because the regulation didn't exist. But it's not like they said it's never going to be allowed, right? They actually went back and they worked with the startups, and they've now allowed, now the scooters are back because there's some regulation around the space. The same thing went with car rental models that were tech-based. So I think the opportunity, the investment will always flow where there's opportunity, and opportunity will always be created by the economy and the regulators, and the opportunities that the government will help create within that country or within those regions, right? So that's where I think the money will go, and I think that's how the money will go. At the end of the day, you can do the same business here that you can do in another country. The money will always go to the entrepreneur who can convince the investor that he can make it happen, right? So that's my view on the question.
Thank you, Ali. We'll move to Dr. Ruchi.
Yeah, I think like we mainly focus on life science, biotech, healthcare, medtech startups. So I think that's a sector that suddenly people are much more aware about, and they're much more willing to invest into as well. Even as angel investors, I've seen like people are ready to invest into like healthcare startups at the moment. In fact, just a couple of weeks back, I was with an all doctors panel, global panel, and like all the doctors worldwide were saying that suddenly all the patients are so much more adherent to the medications that we give to the patients, because everybody is so much more careful about their own health because of like the added risk that obesity, diabetes, hypertension bring in times of COVID as well. So I think health is something that people are much more aware about. So even if we look at angel investors, there are a number of angel investors, doctors themselves who are investing into startups that are working on the healthcare space. It's just that the valuation of these startups is so high right now that like everybody is sort of waiting for a correction to happen. So I think this sector would definitely boom. So we have invested into AI, robotics, a couple of medical simulation companies. And the next big trend in healthcare that we see is longevity. So we have invested into a genetic and a microbiome testing company. And these companies would actually go to the next stage in terms of like precision medicine and personalized medicine as well. But that is something that is difficult to scale at the moment. So I think that that's a much more long-term investment. And apart from that, in healthcare, we see a good trend in terms of elderly care. That's a sector that was completely ignored for a long period of time. But recently, everybody's focusing a lot more on home health and elderly care. There was recently a news that around 500,000 nurses from Philippines were sent to Japan just to take care of the elderly population there. So there's a huge need. And there are startups that are trying to disrupt this space. So these are the sectors that we currently are looking at. And even as like the network that I have with angel investors and doctors, we are seeing that these are the sectors that would definitely boom in the coming times. But it's just that the valuations are really high at the moment.
Thank you. We'll move to Hanane.
Yes, I believe I would start by saying, let's again go back and reflect to what did this pandemic or this crisis trigger in us? What are the needs? What are the pitfalls that were identified when the crisis hit and disrupted, our lifestyle, the way we work, the way the kids go to school. So from those problems and from those bottlenecks that everybody felt, this is where opportunities lie, because we go back and say, okay, what could have been better if it was there, then it would have facilitated. So I would say, of course, health, edutech, fintech, agri-tech as well, because a lot of, with the disruption of supply chain, a lot of countries have started moving around, having self-sufficiency, especially with the food, especially in the region here. So I think that agri-tech, edutech, and remote work as well would be probably prosperous fields that will attract investors. But again, it's really about thinking of staying attentive to the emerging needs as we go, because COVID-19 is just one crisis. It created it showed us or identified or revealed where we are lacking, and whoever identifies those problems that we are lacking and try to find solutions for them will really create that opportunity to attract investors. So it's about eyeing those opportunities, staying connected and human-centric, I'll say it again, which means really listening and engaging and observing what's happening around us, so that we can sometimes even sense what would be the needs. We can start sensing from the future what would be those emerging needs and be ready to find solutions for them. Because at the end of the day, it's really about solving a real problem that will create a real opportunity that will attract investors, because they want to make money and increase their return on investment.
Thank you. I'd like to add my point of view here before ending the call. And I think it's a correction period now. Maybe people forgot that the crisis started before the pandemic. In 2018, the retail crisis started. It is even more effective, or it affected the market more than the crisis of 2008. Big institutes failed, got bankrupt in the Middle East, internationally. The pandemic came to clear the remaining. And what I see is due to three factors. One, the correction. Two, the social status that the people are in. Now, people are stressed. People are feeling that they need to wear masks. Even they don't socialize properly in coffee shops and places. There will be a huge shift towards retail again, because it's a correction in any sector. In any sector, you have a correction. It's a wave. So technology goes up, then it has a drop. Biotech goes up, it has a drop. This is the way it works actually in any investment. Retail will be, my point of view, will be the next rising sector. There is a huge correction in it. It will come on a different way. It will come with a new, let's say, aspect. Maybe it comes more into SMEs rather than corporations. The pandemic showed us that SMEs sustained more than huge corporations when it comes to F&B and retail, because they could customize themselves within the requirement, while huge corporations, they went bankrupt because of the huge cost of operations. So what I see, it's a correction period. Retail, logistics, retail, some of the technology service-driven platforms will have a huge boost, while we'll face also a huge drop in technology in sectors that will be replaced by other sectors, and due to the social, let's say, so I don't want to call it disturbance, but social effect that the people will have. As if you are putting people in a cage and suddenly you tell them there's no more COVID. So immediately the whole scenario will change. This is my point of view. I'd like to thank everybody. It was a very thorough discussion, and I'd like to thank Dr. Ruchi, Mr. Ali, Ms. Hanan, and Mr. Marwan for their interaction. I'd like to thank the team who made this webinar happen, Elena, Mr. Navaz, Mr. Lorenzo, and Ms. Renz. I'd like to thank the audience who attended today and asked us some interesting questions. We'll be having more and more webinars, and we'll be always connected with you guys. Thanks again, and wishing you a lovely evening. Thank you.
Thank you.
Thank you. Thank you very much.
Bye, everyone.
Bye.
Thank you.